So today is officially the new month of the trading market or the stock market. And just to go over the new cases for COVID with the Delta trend, I think it's safe to say that the trend line is essentially flattening, and I'm almost confident to say that it is starting to decline. So I think we're having um, pretty much a recovery in the opening of the economy, or the resuming the opening of the economy. That's for the world data, and this is for the U.S. data. Now, the U.S. data continues to somewhat show elevated or at the high. I still believe it is flattening and continue to flatten as we continue to have vaccines and vaccination and the summer month. So more data will actually confirm it, but at this point I would say it's starting to flatten and should begin to flatten. So that being said, what is going on with the stock market? Um, Today we have essentially, is this a capitulation top that I was referring to? So I was saying on Monday, Tuesday, or this is Monday, Tuesday, last Friday, I was suggesting that we're gonna have a capitulation top, meaning the stock market will continue to explode, and then ramp higher and higher, where it essentially go exponential, and a reversal of that exponential just a little bit would indicate um, a top in the market. And then for the month of September, we will have, at least for the first week or two, a general decline or correction of the overall stock market. So this candle officially looks like a doji top. And a doji top is a reversal candle. Essentially, it's the mirror image of a doji tail, or doji tail. So this tail right here indicates a flush and a recovery. In this case, it was right at the 20-day moving average, and boom, you get this 5-6 days of rapid increase. Um, So if this is the mirror image of a doji tail, this is a doji top. Does this indicate that it's going to be a reversal? No, I would say technically that's what a doji top tend to indicate. However, the volume is so light, and this recovery, or this correction toward the end, um, essentially, I don't think so. What happened, I believe, is what happened today in this correction right here is, I believe I believe this correction is more or less because of Amazon. Okay, so right at the this is right here at 12, right here at 2:15, right where it's at the VWAP line. So at 2:15 is when it was at a critical area. However, on Amazon at 2:15, right here at 2:15 is where it was about to break out. So essentially what happened is that they hit Amazon. Um, this hit on Amazon is done to trigger the QQQ, or the NASDAQ, to go below the they needed to get because of the option volume. You can see all these option volume, and people were making money buying the options. So essentially, all the options of the key level, 3500, uh, 3450, you can see this is a lot of money in the option market. And to collect that money, the price has to, be continued to go up or at least stay flat. And they needed either the market maker or the people who are hedging, they needed to kind of make a correction in Amazon so that the contango of these call options would decrease in value because it's too much profits. Essentially, it's out of their prediction or out of their range of safety. They don't like it to when it's go this high. There's just too much going on, especially when the volume is so high. So what happened is essentially it was about to break out, but the QQQ was right at the VWAP line, and they knew if they triggered this reversal, the QQQ would break below it. So all they had to do is trigger this reversal, and that was enough to get the QQQ below this this VWAP. And as that is a break of a technical key level, that trigger this whole massive sell-off, and they go hand in hand or in lockstep. Not always in lockstep, but when you get this type of sell-off, it's in lockstep. Essentially, all stocks or all the high techs and high flyers will show this type of behavior as the QQQ. Um, right here, this is at the 215, or this is at the 215, and right when it breaks the VWAP, like I said, this triggers a sell-off, and it's all because of Amazon, in my opinion. And I know that looks like it's just a coincidence, but to me, data shows that it's more than a coincidence. Data shows what the data shows, and a coincidence doesn't isn't really a coincidence can't it doesn't really look like this in my opinion. So Apple, you can say, well, Apple showed this correction, and maybe that's the reason was that at where's 215 right here, it broke this key level at at 215. It broke this key level. Well, you're right. This isn't a key level. This is the 5-minute trend line. But the 5-minute trend line, is that really a key level? I mean, yeah, it is, but Amazon sees how see how they all kind of line up. Like Apple has this whole display of weakness, and then right at the 215 mark at this trend line is when it breaks. That breaks is when the QQQ breaks, which is also when Amazon breaks right here. So Amazon breaking right here, not breaking, but not, you know, going down a little bit because they don't want it to break out. So it's probably both in a sense, but I think Amazon was the key factor. But it's probably also Apple as well. And because it's really because of this, in my opinion, I don't think this doji top, even though technically this is a doji top, and this doji top suggests that it will decrease. I think the volume is too low, and it's really more or less because of Amazon, in my opinion, in that Amazon triggering this sell-off at the end, resulting in this doji top, is not a fundamental doji top. Now, I could be wrong, okay? Very well, this could lead to a correction. But at this time, I'm just gonna have to go with what my gut instinct tells me. Technically, this is a correction. So the risk reward should be toward the risk side. You should focus on risk management because technically this is a doji top. Um, so I wouldn't be buying anything based on this candle, that's for sure. But my expectation is rather a stability, a wiggle, maybe even a fast breakdown to lure in these shorts. So all the shorts here, all the shorts that are um, collected in this type of sell-off, they might want to continue to short because of this type of doji top. So any new shorts, all if there's another candle here going down, another candle, whatever, I think these shorts are potential for a squeeze. And that squeeze will essentially lead to that capitulation top that I'm looking for. And it could be next week, or it could be Monday. I mean, tomorrow. Probably not tomorrow, but it could be Friday and Monday. So Thursday and Friday tend to be very volatile day. So let's go over Amazon and the trades I made the last 2 days and why I made this mistake. So let's go to custom. Let me see. Apply. Okay. So, let me just go back one day. 3108. Apply. Hmm. Okay. 030. And this would be 08. 31. So, here's where I made a mistake on Amazon yesterday. So, on Monday, it was closing at the near the high. It was not the high. It wasn't a high of end of day high close that typically you would see. There was a little bit of a retracement, but it wasn't. It was enough data where I wanted to get into a call position at the end. Now I had put it right at the VWAP and it didn't get there. So but I was planning for an update. So I had written in my notes the target would be 3450 with a bias up for a target of 3450, which is right here. So that was the expectation I had on Monday, and on Monday I made the good trade selling the straddle, which is selling one call option and one put option. And in this case, I rushed to do it, and that is where I made the mistake because the volume was high. I rushed to sell the call and the straddle so that if you overlay or if you look at the VIX Amazon, okay, so it opened high, and at the time I was thinking um, I was rushing in to sell that straddle because normally a lot of time the gap or the first two candle is the high of the day, but I should have known better. I should have waited, given the fact that the VIX, this guy right here, was also high. So it gapped higher. So potentially it could have gone much higher. And that was where I made my mistake. I was not patient, and I rushed in to sell the straddle. So I sold one call option and one put option 2 weeks out. Well, when this value goes up, this is the Amazon VIX index. When this goes up, that means both my straddle is losing money because the intrinsic value of the options, no matter what direction it goes, well, it does matter in the direction it goes, but um, unless it stays the same, any direction that it goes, whether Amazon goes up or down, this increase in the volatility of the VIX for Amazon means my options overall is increasing in value, the intrinsic values, and therefore by selling the straddle, I am losing out. So at the peak, I was losing 450, and that causes me to, I guess, manage the trade or make. Had I waited like I should have, like yesterday or on Monday, given this signal, I should have waited and sold at this point, or wait for a small correction somewhere up here. I should have sold the straddle instead of selling it too early. So having patience in the morning, and the notes I have is morning traps, afternoon trash. uh, and I made this mistake. Well, I made this mistake because I was complacent, but also because I was overconfident, because I was essentially making new highs on this account on a regular basis. So it's a bad habit, or not a bad habit, it's just a bad mistake. And then what happened was that Amazon right here was when I was down 450 or whatever, um, and then it went up. So at this point, I made the correct trade of selling the the call option. So I sold the call option, or I cover on the call option and held, no, I cover on the put option and held the call option. And that was the right play, except what did I do? I did not cover the other, the call option. Essentially, I held one side of the option. On the two-sided option, which is the straddle, you shouldn't hold one of the option at least very long unless you have really strong data to suggest. And this is where the brain seed that I mentioned, very often you can self-fulfill yourself with information that's not really accurate, because the VIX was high, like I showed you, the VIX was up, and this whole kind of correction in the morning, and the QQQ was down. I had it in my head at this point in time that it was going to trade at worst flat to down. So I was hoping to profit on at least flat to down. Well, I forgot all about my analysis yesterday. My analysis yesterday was that the call options on Amazon was heavy. The target was 34.50. I had planned on buying a call at the end. I had a order to buy the call option at the end. It just didn't trigger. So everything from my analysis on Monday or yesterday for this day right here, Tuesday, was for an up day. It didn't happen, and this little bit of data right here, and the QQQ being down, the VIX being up, trigger me to believe that Amazon, I invalidated everything that I analyzed yesterday and seeded my brain that it was going to be a down day or a flat day. Well, guess what? Holding that one-sided trade is a bad mistake. It is a bad habit. Um, and I also bought the put. So I bought the put, and when the candle switched from this to that, I was up 250 on that put. But I didn't cover, of course, because I was just, normally I would cover, but for some reason it was such a quick jump. It was a quick jump to 250, and I should have covered, but I didn't. And then it started going the opposite direction. So I was up 100, then I was up 50, then I was up 30, then I was up 15. And so I didn't want to take the small loss. So that's one of my worst habits, is not taking small loss, especially when I saw 250. Well, guess what? It went the opposite way. I ended up losing 800 on that put, and on that one-sided trade, I lost 1400. So I ended up losing almost 2500 for those two options. I ended up the day, losing, I think, 1200 or whatever. But the point being that, um, you can easily seed yourself with the wrong strategy if you don't do the correct risk reward management. And it was definitely not enough data for me to seed my head that it was going to be a down day, especially for Amazon. And guess what? They ramped it up. And I believe today, actually, they ramped it up to the high of the day right here. So it ended up high of day. And of course, today, um, was essentially high of day, and then you have this correction. So, luckily today I made up all the gain, and in my account continued to be at a new high on this account, on this risk management account. But this is the new month officially. Now it is the month of September. So this is a risky month. 911 is here. September tends to be a risky month, so risk management account um, would probably be not to sell the straddle. So I am starting to close out all my straddle selling. Probably don't want to execute unless you can see how this VIX right now. This VIX on the daily is really, really low. It can probably continue to go lower. So you may have a week, maybe a week and a half of more safety on having low volatility. But at a certain point, I think this month, and it may be in a week or a week and a half, you should not be selling the straddle, because when the volatility increase, selling the straddle would mean normally when this goes up, that means the put option is gonna be jumping in value. So for a risk management account, I would probably be putting a bet on the puts, or buying the puts, and selling the call option. Selling the call option may be the best strategy on the risk reward management, knowing that, yeah, they're gonna be, and it'd be even better if there's a capitulation top. Hopefully there is a capitulation top, but even if this turned out to be straight and a capitulation top, I think overall selling the call option, for Amazon, for example, even though it looks like there's a target for this Fibonacci, um, it may not get there just because it looks like the Fibonacci right here is a target, and that is at what level is that? 3550. Just because there's a line right here with the Fibonacci at 3550 does not necessarily mean it is going to get there. It can easily start to flatline and go back down to this next level, which is 3400. So risk reward management never predict exactly where it's gonna go just because it looks like it's gonna go there. You have to play based on what happened on a day by day basis. So, knowing that we're close to the top, knowing that it is September, and September tends to be a correction month, I probably won't be selling the straddle in a week or two. Now, I have been selling the straddle for stuff like Shopify. So you can see how well Shopify has been in a range. So selling the straddle on this, and this is what I was using pretty much on my small account. I opened up a small account of 50,000 a month ago, and that's up to 5450 right now. So it's up 4,500 on that account, and that is also a risk management account, but it's a small account. Um, so I've been using Shopify for that. Bookem was the other one that I was using here. At this point, I started using the straddle. I do have a straddle open up. This is the one on mRNA. So I will be closing a straddle on mRNA pretty soon. Hope probably tomorrow. I'm gonna look to close it. To be honest, it does look to be continuation of this tight range, but being September, I don't want to be holding a straddle for more than, I'm probably going to try to close out on all my straddle positions. Probably start to sell on my 401k as well. I still think we have a couple, a week, maybe a week and a half left before a total collapse in the market. But better to be safe sooner than later, in my opinion. So looking to probably manage my way out of my 401k as this next few. Now Thursday and Friday, which is tomorrow, and the next 2 days are totally wicked days. Wednesday, the other note I have is Wednesday is reversal Wednesday, so you have morning traps, afternoon trash, and reversal Wednesday. And so today is a reversal Wednesday. Officially, you can see that it's a reversal. So reversal Wednesday does apply, but that doesn't necessarily mean that Thursday or Friday will be. I think a lot of time Thursday can be a correction day, but right now with the way things are, it may be that Thursday is a head fake day, and then Friday is the large correction day, or Friday can be a capitulation top day. But Friday, if Thursday does not move, then Friday will move. If Thursday does move, which is tomorrow, one way or the other, most likely if it moves tomorrow, it's gonna move down. But if Thursday does move down, then Friday might be a week of a movement. However, if Thursday is a flat day, then Friday can explode one way or the other. The meme stocks is starting to lose ground, but I think this is just a consolidation. Eventually, I think what's gonna happen is it's gonna be a head fake. I'm looking for both AMC and game to power up for another short squeeze, maybe to end next week. And that short squeeze, I'm still predicting that short squeeze will line up with the capitulation top. And that squeeze is when they is at that point where that squeeze is too high that the contango or um, the risk factor on the hedge funds require them to sell assets, and that assets are normally in the general market. As you get that capitulation top on the general market and the squeeze on the meme stocks, those will align so that it will have that reversal candle, and that reversal candle is when you get that correction the next day. So that is what I am still preparing for, predicting. Now those are just prediction. Anything can happen, obviously. But yeah, so that is still my prediction. However, this reversal candle can follow through technically and continue to. So that is really all I have for today.